Hey everybody, my name is Solus, and today I will present my DSA project. And this project could be summarized by one question, which is what makes a successful prediction markets trader? So let's dive in. What is my main motivation for this project? So, me myself, I was very interested, and I'm still am interested in cryptocurrencies, and these prediction markets are based on them since the tokens themselves are like contracts and they have yes and no tokens, and this was like a main spin-off of cryptocurrencies. And due to their growing demand, like just the market cap of them and how much volume is being traded is constantly growing. And I think there are so many inefficiencies in these markets because most of the traders are just gamblers, and uh, edge could be gained here and profits can be made, let's say. So, what are the main data sources? Where did I get the data? So, the data getting process, I think, was the most complicated part, and it took the longest amount of time. And when I finally cracked the code of getting the data and successfully deciphering it, I was very happy. So I got the data from Hashdive Premium API. Hashdive is a service that basically aggregates all the polymarket traders into uh, one place and analyzes their performance, all their trades, and calculates all the statistics because there are around 2 million uh, polymarket wallets, and to just analyze the data themselves, all the trades, would be such a long time. So Hashdive did it for me, and basically, the hardest part for me was to get the data even from the Hashdive, since Hashdive is based on Streamlit library, which is also very used in data science. It wasn't like a simple API call I could do, not a simple like RESTful API where I could call like a GET request. It was a WebSocket connection, and I needed to decrypt the binaries via like protobuf, like this decryption uh, protocol. And due to the WebSocket being so slow, it just took quite a long time. As you can see from the project tree, I had created so many files even to fetch the data. So parsers, different like API routes, and different utility functions. So the main thing was the heavy API rate limiting, and yeah, the WebSocket, and also the thing that I had to basically decrypt, and then when I was sending a API request, I had to decrypt the data. So that took the longest time, and I saved all the data in CSV file. So for the data set, initially I had like 60, and still I have the 63 features per trader. But I dropped most of them because they are just unnecessary. I still left them if in the future I want to do some more analysis. But the main ones are like performance metrics, trading behavior, trader types, and category performance. And these features were more than enough to analyze the performance of polymarket traders. So EDA performance distribution. So key statistics: mean win rate of around 30%, median 26%, and standard deviation was 20% of the win rate, which is very high. But this is to be expected because, like, if you imagine all the different traders, they trade such different strategies, and the win rate isn't the determining factor if the strategy is profitable or it's not. The thing that predicts a strategy, like the outcome, is the basically the win rate and to risk reward. So if a trader is taking like, if a trader has like 20% win rate, but he's like, his risk reward is 1 to 10, he is printing money. So this is not the only metric that matters. And Also, I did some smart score validation. So what does the smart score correspond to, since it's a proprietary metric? So it mainly corresponds to PNL, and that makes sense because when you think about it, win rate, as said before, doesn't really matter. If a trader like uh, bets 90% of the trades $1 on a very high win rate strategy, uh, but like sometimes bets like most of his portfolio on one trade and loses, he will have high win rate, but he will be down in PNL. So smart score mainly correlates to PNL. So these are the win rate distribution analysis. So it's pretty dynamic. Most of the traders fall like in, I would say, like win rate you could expect uh, around like 20 to 40%, and it goes down dramatically because and I think there are some outliers in the very like above 0.8 win rate. It's mainly, I think, insider trading. And same for the smart score distribution, since it's based off PNL. It also corresponds to the basically it corresponds to the PNL, and analyzing how it corresponds to number of trades. Like you can see, as the number of trades goes down, the smart score goes down. So I think you could say that from around 70 smart score, mainly all the traders are insiders or very lucky traders that just bet a really big size and just won. So that's an interesting point. And for the win rate, since the win rate, as said before, it isn't the main indicator of if the strategy is working. It's all over the place. So it's mainly, yeah, because smart score is correlated with the PNL. For the next analysis, it's category analysis. So what markets do traders focus on? So most popular category is sports. So most of the volume was traded here, and I think like on all the prediction markets on Kalshi and on our, this is the most traded category, and it makes sense because it's so easy to trade, and it's much more dynamic because beforehand you need to place a parlay and then just wait, but now you can trade dynamically as the game goes. And diversification, so mainly most of the traders trade four categories. 23% trade below or included two categories, and 35% trade five or more. And yeah, as we can see here, most categories traded where the most volume is sports, crypto, and politics. This mainly because I think that's the highest edge you can have. Like that's where the most inefficiencies are and the most volume is. So that's just where people can trade the most amount of money. Win rate distribution, I think this is kind of random and doesn't really say that much, but it clusters around like around 50% in different categories. And yeah, for the categories traded, it's quite a nice distribution, as you can see. Like basically most traders like fall into trade like 3 to 5 categories, and uh, like new traders like just trade a couple of categories, but most of the user base like trade on multiple markets. And for risk behavior analysis, where do traders place their bets? So there is also statistics where I extracted from the features where I can see where the traders place most of bets. So, for example, there since in Poly market there is a range from 0 to 100, you can see, okay, if a trader places bets from 0 to 20%, he's just you could say he's just gambling, or yeah, he's placing lottery tickets. So uh, and it's just an interesting analysis to because it basically tells what strategy the trader is running. So most like of the traders is long shot hunters, so they bet on low probability, uh, and then it decreases to the higher the probability, the amount of traders decreases. So uh, most traders hunt long shot despite lower expected returns, and like for betting probability correlations, all ranges like show V correlations with win rate, so you couldn't really like predict, uh, and it doesn't really correlate with the win rate. So here are the probability ranges where most traders bet, and yeah, very interesting statistic that you would expect most of these like high smart score traders to bet like on to have like a crazy win rate, but it's kind of the opposite. It's they mostly bet on lower ranges, and I think this can be explained by the mass, like by the sheep behavior in markets. Like if a market has like let's say 90% probability, like uh, and a person would see, oh, I can just get a free 10% return on my money like that, and of course you will get that 10% like a couple of times, but the probability is boosted by people wanting to capture this free return, and in reality maybe the probability is like 60%. So in the long game, you're like if you simulate the trades based on like Monte Carlo simulations, you maybe lose money. It's just like a illusion, and these smart traders exploit it. And trader types. So do trading styles matter? So yeah, they matter. They mostly dictate win rate. So trend followers, the people I talked about before, of course they do a bit of more smart strategy. They maybe bet on events with high probability when it's close to expiration date. Uh, so they take less risk and they just capture the last remaining gain. And worst performance, you could say worst performance on win rate, but maybe if they do lottery ticket like strategy and their risk to reward is like 1 to 100, you know, if they place like many bets and one bet just goes 100x, that's a good strategy. And yeah, most common types is contrarian, lottery ticket, new, and novice. So the last two are just like new traders, because right now there are so many like of these new traders that go into prediction markets, especially after like these popular events in the media, like specifically political events. And yeah, as we can see in the graphs, it's uh, most popular are contrarian, lottery tickets, and new. So most new traders. So for hypothesis testing, I did two hypothesis tests. It's first I did one way ANOVA. I did this is quite a simple test. Um I basically my question is, do trader types have significant different win rates? So the null hypothesis would be, yeah, all trader types have equal mean rates, and the alternative hypothesis would be that at least one type differs significantly, and this could be even observed without doing this analysis. Like you could see like the trader types, of course they differ by win rate, and yeah, I've got a F statistic of 31 and high p-value, highly conclusive p-value. So I reject yeah, I rejected, of course I rejected the null hypothesis. For the second hypothesis testing, I did two-way ANOVA. So does trader type effectiveness depend on the risk profile? So uh, I tested how these two factors correspond to each other. So trader type and risk profile. And based on these results, I got a statistic of 12, around 12, and risk profile of for risk profile I got a F statistic around 90, and interaction between them two, it's not really significant, and it makes sense. It makes sense because mm, yeah, the data is like not really linear, and due to just being so many like these non-linearities, it's not really significant. So diving into machine learning, this part was the most interesting for me because machine learning for me is a completely new concept, and uh, my ambition right now is to become really good at it because I think it's a very valuable skill, and going to into the future, it's just gonna uh, there are gonna be many opportunities to use the skill set for my own projects and maybe for work. So the question is, can we predict win rates? So initially, I tested the most basic approach, with which was linear regression, which failed spectacularly, and this makes sense. I don't know why I even tried it. It was very easy to code, so I just tried it, and yeah. But since that data is like not really linear and quite random, not random, just non-linear, I switched to XGBoost and I got significantly better performance. So R squared score, I got kind of good predictive performance, and it explained a lot of the variance in the data. For root mean squared error, I got like relatively for this data, I think a kind of good performance. I'm happy with it. And for uh, the mean absolute error, I got a 7% uh, like deviation of around 8 percentage points median error. So I think it's also quite good. So why XGBoost 1? As I said before, it's like it captures just nonlinear relations, and I think for this kind of data, XGBoost was the best option. Uh, Also, a very interesting analysis for me was the feature importance. So, which kind of features were the most important for XGBoost for determining the win rate? And the most important is was trader bets on 0.8 probability interval. So it basically how much the trader bets on quite high probability markets. And uh, yeah, this makes sense because like if yeah, from this basically if trader bets on this like interval quite much, it means that he has like quite high win rate because he's not taking these low probability like lottery tickets, and like 0.8 interval and 0.8 interval like captures uh, in the actual probabilities from 0.75 to 0.85, so in this like 10% range. And I think this is the range where you can like conclude pretty well what the probability is gonna be. And the last four and all of the last just make the prediction even more better and even more accurate. So key findings and summary. So successful prediction market trading is not random, and these smart score and relatively smart traders aren't just like uh, getting betting and getting these high PNLs and relatively high uh, Sharpie and Sortino ratios. they have strategies and they are using inefficiencies in the market. So evidence for this is like uh, how these traders bets and why it's not random is because like these trader types differ significantly. Um Also, my model predicted quite well the win rate, so the features quite well describe the win rate data. So there is some kind of there like concretely the data is not random. So practical takeaways is that if you want to succeed in prediction markets, you have to find your edge in inefficient markets. And a lot of these traders that we have seen, they bet on low probabilities. So that's the most uh, prevalent strategy that we've seen. So you have to find your edge via like uh, modeling, using different machine learning techniques to model crypto data, finding arbitrage, and yeah, finding inefficiencies in the market, because right now most of these traders are just most of the volume in these markets are just gamblers. And the next takeaway is that just avoid gambling on long shot unless it's diversified, like in the strategies said before. And for academic insights, uh, it could be said that like since there are these traders with such a high P&Ls, uh, it can be concluded that prediction markets show inefficiencies. And since they are very new, there are so many inefficiencies. And also, the behavior patterns of these like different wallets could be are quantifiable and predictable, and from the trading performance and which categories is traded, how in each category the trader performs, or even like the trading regions the trader is trading in, like in the intervals, you could clearly observe and determine the strategy and the risk profile of the trader. So that's pretty much it. Thanks for listening. Take care.